Hey, this is Ladybug FX Forex Baddies. How are you doing on today? Yes, and so today I really wanted to go and look at the higher time frames, the monthly charts, weekly charts, for hour charts. Yes, so that we can actually mark up our charts and see where our support, resistance, and what direction trend is moving in. Okay, so we're gonna actually do that on today, and you can most definitely be in tune so that we can get this done. And while you're preparing, go ahead and hit the like button and subscribe. Most definitely. Ding ding, ring that bell. Yes, for notifications. All right, so look, we're on the monthly charts on the US dollar and Canadian dollar. Yes. And as we see here, we do have the 200 moving day average on our charts, right? So this is what you have here. And I actually make mine really super thick so I actually know, hey, this is my 200-day moving average, and it's also white. It's always white. So I always have that memory in mind because when I put the 50 on there, it's going to be turquoise, and I know the difference between the two. All right, so this is my 200-day moving average. And as you can see here, price has moved in a bearish trend. All right, so you see price was moving and a bullish trend here, and then we see here where price has actually changed over. A 200 moving day average has crossed over. And the thing is, when you actually look at the confluences in this area, we have many confluences, right? So look at this. This area right here, which actually is one of our areas. So let me go ahead and draw a rectangle over this area. So all this right here, all this right here. You can see all that right there, even down over here. You can see this, right? Huge area. But we do see where there are multiple touches on these candles, right? And then these right here are just really huge. These two right here, really huge in those areas. So we're just going to go ahead and mark that as our range, okay? So with that being said, and this is our supply zone, all right, because this is the resistance area, okay? So, but we know this area up here is a resistance area, period. Price moves in this area and then it begins moving bearishly, all right? So that's one of our confluences. It's right here in this area where the demand zone is, and you have multiple touches. One, two, three. You're gonna have four touches in that area. And even moving over in this area, you see where price touched this area. Yeah, so you have multiple confluences stating, hey, price might be exhausting from the bullish momentum. Yes, it's exhausting. And it's about to, what? Turn around. Yes, price is losing steam. And so price is beginning to move in a bearish trend. All right. And so as you see here, we have our dojis. Look at those. We have our multiple dojis. You have the shooting stars. And look at all that. Look at all that. Look at all that, basically telling you, hey, price is about to move in a different direction. All right. So we have multiple confluences in this area. All right. And so let's just count those. One, all right, being in the demand zone or resistance area. Two, you have all your little dojis and shooting stars and all those type of things over here. Let me see if I see anything else in this area. 200-day moving average crossed over up here. So that's three. And price did move below the moving average here as well. So that's four. You have four confluences right there staring you in your face that price is moving in a bearish trend. Price is turning around on you. All right, it's switching over. All right, so that is on the monthly chart. So what we're going to do, we're going to go ahead and mark up the charts like I said, and we have our support down here, so we can make this our area for take profit if we wanted to actually go ahead and enter enter a short and take profit down here at this area here where we have multiple touches. One, two, three, four, five touches down here. We're stating that this is our support area, all right? Excellent place to take profit, right? So that's just on the monthly chart. So let's go ahead and look at the weekly chart. Yes, and see what's going on with it, all right? All right, and so that's the weekly chart. Still, price is moving. What? bearishly. But the best thing about this one is that it actually gives you an opportunity to see an area where, yeah, you can enter a trade, most definitely. And as you can see here, where price moved downward, and of course you can use your Fibonacci tool, most definitely, to see what's going on. That's right here on the weekly. Let me see here. All right, so price is moving downward here. All right, and then price did move up towards the 50, 60. It didn't get towards the 0.618. It didn't get that, but it did hit our zero point 0.5, all right? Yeah, let's do it right here, about right here. Yeah, so it still hit our zero point 0.5, all right? And so it did begin moving bearishly, all right? So this actually is a really good area to enter a trade right here in this area, right? If you want to enter based on monthly and also the weekly, because both of those are basically in sync. Both of those are moving bearishly. Yes. All right. And this is after the retracement. And so let's go ahead and look at the 4 hour. All right. So this is our 4 hour. And let's go ahead. And we know that it hit the 50 right here. So we're going to go ahead and just mark this up on our charts. And then we're going to text. This was the 0.5 area on the weekly for retracement. All right, and then we're going to go ahead and look at that style of that. And we're just going to make this a little bit of a thinner line and also make it red, okay? Most definitely. Yeah, so we're going to move this. All right, so let's see here. Let's see, price has moved up and we're going to delete this. All right, and the reason we're deleting this is we want to see what price is so we can actually have a clear point of view of where we are on the charts, all right? All right, so we see right here in this area, this is where it hit our zero point 0.5 on the weekly, all right? And so now we're actually on the 4 hour, and this is where we are on the 4 hour, and which is awesome. Prices moved significantly from that area to this. So we're going to draw another. There we are. All right, so price is actually still moving upward from this on the 4 hour for the retracement, okay? So we're going to look for price between the zero point 0.5 and the 0.68. And that is where we would enter, all right? Once we receive our reversal candle confirmation, we'll go ahead and do that, all right? So that's right here in this area. All right, and so that is what we're going to wait for on the 4 hour. All right, and so the reason we're doing this on the higher time frame, because the higher time frame confirms the trueness of the trend, the true trend. All right. So on lower time frames, you might have smaller time frames like right here. This is a 4 hour candle that we're looking at right here. But within that 4 hour candle, we might have price moving upward or downwardly, bullishly, and bearishly, but still, but it's within the true trend, which is the bearish trend. All right. And so that's the reason why we actually place our stop loss and our take profit area. So we'll actually know where we want price to move to as far as taking profit. But our stop loss, most definitely we want to make sure we maintain that 1 to 3% ratio, right? Most definitely we want to do that. Yes, we want to do that. All right, so we're going to actually wait until price actually moves in this direction here, and then we're going to go all the way down maybe to the 1 hour, and you can go down further like 15-minute or something of that nature once you see prices in this area here. And then we're going to go ahead and look for our confirmation. That's right. We're going to look for our confirmation in this area, and then we will enter the trend, and then that will allow us to have a stop loss that maybe won't get stumped out, most definitely, and we'll continue moving in a bearish trend. All right. So, yeah, that's basically where we are. So we're actually going to wait on that.